Hello everyone, my name is Rainer and welcome to my weekly market analysis. So if you've been following me for quite a while now, I would like to say thank you for taking time off your busy schedule to actually spend time watching my videos. And if you're new to what I do, so basically I'm a trend follower, so what I do is I identify trend trading opportunities and I discuss about my trade reviews, my trade management, psychology, and much more. All of this on a weekly basis, and usually the videos is out on a Sunday. And yep, that's what I do because I actually enjoy sharing, and I believe by sharing, we can all grow as traders. You could actually learn from my past experiences, or perhaps even learn from my mistakes so as not to repeat them, which may cost you money in the future. So with that, let's look at what this week brings us. So first and foremost, I would like to go through with you a couple of trade review, namely the New Zealand dollar, the dollar yen, and lastly, I would like to talk about a potential setup on the indices, which is none other than the Nasdaq. But before I get to all of that, let's look at this chart, which is actually the chart of the dollar index. So this is a very, I would say it's a good chart for reference if you are trading the currencies, because the dollar index itself represents represents the chart being weighed against a basket of currencies, and the basket of currencies that is being weighed against, namely, is the euro dollar (EU), the pound dollar (GU), Aussie dollar, New Zealand dollar, and the dollar Canadian. So this would give us from this weightage of these currency pairs, the majors, it gives us the chart of the dollar index. So by looking at the dollar index, it will give you a good macro perspective or macro view of what the majors are doing. So this is the chart of the dollar index, and you can see that it's actually been bullish since May this year. Since over here, since I would say August this year, when price broke out of the resistance over here. So when it broke out of the resistance, you can see price trading higher for the last few months. So this result in the most of our majors, we see that they're all pretty, I would say, bearish because of the strength of the dollar. So with that in mind, looking at the dollar index chart, so what we see now is actually potentially a retracement that is potentially over, and price seem to be heading higher now in the coming weeks. So the chart to me is still bullish, so I'm still bullish on the dollar, and if I'm bullish on the dollar, chances are I'll be bearish on the majors like perhaps the euro dollar, the pound dollar, given the simple fact that the dollar is still in an uptrend. So with that bias of the dollar being in an uptrend, let's look at some charts and have some trading ideas that we can formulate. So the first chart we'll look at is the New Zealand dollar. So I did mention this on my site, right, under trade setups, where I said that this pair has actually fallen 1,000 pips over the last few months, and traders are saying that this is oversold, right? Price is oversold now, and we are expecting a rebound. So not for me. Basically, I trade where the trend is, where the momentum is, and it's still towards the downside, and I'm looking to sell this pair. So as you can see on the weekly chart, price broke this key level over here and traded lower. Then look left, it broke this key level over here, traded lower. So if you were, I would say, on the sidelines of watching this pair, you would see that, it pays attention to see what price is doing and where it has been. So you look left again, there's a potential support down here, but that shouldn't deter you from shorting, because if you look at the historical price action on this pair, twice there is both a decent support here, and twice it has been broken. So why do you want to fight the momentum and the strength and the trend of this pair? Why not just trade the trend and just trade when there's a shorting opportunity should it arise? So with this bias I have on the New Zealand dollar, I was actually looking to short this pair this week. So again, looking at the daily chart for a clearer price action view, we can see the kind of price action that this pair tends to exhibit. So we had the strong impulse move towards the downside. This pair then consolidate here for a while before breaking down lower. Consolidate here again, break down lower, slight consolidation, a further move lower, another consolidation down here, another move lower. And what is price doing right now? Because with looking at it at an objective perspective, price seems to, that's right, consolidating right now. price seems to be doing a consolidation right now. So I would say this pair is likely to head lower based on the historical price action. And with this information on hand, which I posted out, we can look actually where we went short, right? Looking at the side here, I posted that on the 4 hour, the 07925 is a key area to watch. And I'm still looking to short this pair, which is over here. Let me get this chart back out. And 07925, which is somewhere here where I shorted. So I got short somewhere here. And right now my stops is about 2 ATR. I'll just highlight it in red. So here's my stops. And on the daily time frame, since we have that tendency of noticing that price action has a historical habit of breaking the lows after the consolidation. So right now we can assume that price is likely to head down lower and retest the lows over here, because right now we have a potential consolidation, and we notice that price tends to consolidate before breaking down lower. So my entry is in green, my stops is in red, and I will not be adjusting my stops till the lows of this consolidation is broken. So did you hear me? I will not move my stops at all till the lows of the consolidation is broken, because it does not make sense if I would actually, say for example, shift my stops, the red line, to break even down here, because what I'm actually doing is basically putting my stops at the break even, which is my entry price, and price could simply just trade higher back into the upper echelon of the range, whereby traders will be looking to short, and that's where I actually put my break even. So chances are it will probably get taken out at break even. So I do not want to do that. So I'll leave the stops as it is, and only till these lows, right, these lows over here gets taken out, will I be considering to move my stops to break even. So that's for the New Zealand dollar. And looking at the dollar yen, again, the dollar yen, as you know, last week I was actually long this pair in green over here. And this week, what happened was that since the start of this week, we had this massive sell down all the way back down to my entry price, a slight consolidation over here, and right now it's putting me out of the money. So from start of the week I was in the money, till now I'm out of the money. So traders may wonder, why did I do that? Why didn't I set my trades to break even or to protect my profits? Well, the reason being is that the basis of this trade was I was still long the dollar yen. I was bullish on it, and my stop was there in place to be taken out only if the market proves me to be wrong. So right now, I do not know what will happen in the coming week. As we saw, the chart of the dollar index is still bullish, and even though this forward chart isn't looking too good right now, the last thing I want to do is stopping myself out of a trade earlier than anticipated, alright? So meaning my stop was at this red line over here, and what I don't want to do is take myself out of the trade only to watch price action go back up towards the high in the coming week, alright? Because I do not want that to happen to me. I would rather be stopped out for a loss than to manually stop myself out of the trade because it's psychologically not comfortable. But truth be told, I already set my stop loss down there, and that's what I anticipate that I will lose on this trade. So it's actually pretty much psychologically covered, because I know the max I can lose on this trade was from here to here is about 100 pips, which I've already set aside a capital for it. So there's no reason for me that I want to go and micromanage it just to, you know, bail out and save myself this additional perhaps another 50 pips, because, you know, price action seems to be bearish towards the downside. As we saw the chart, the dollar index earlier, still bullish, and the chart of this dollar yen, not as bullish as the dollar index, but I definitely know where I'll be covered, and I'll only get out should my stops be triggered. So that's I have for the dollar yen. So still in the trade and out of the money. And last but not least, let's look at the chart of Nasdaq. Right, so indices, alright, in the US, and the Nasdaq, you can see here, this is a chart of the monthly, and it's actually bullish if you ask me, because I've actually been reading quite a bit of articles, and they say, you know, the next recession could be coming, or is this a correction, or is this a, you know, upcoming recession? But if you look at price from a historical perspective, you see that it's still above the 20 EMA on the monthly chart, right? Still above it. So the 20 EMA is here and price is only here. So I don't see any reason to be bearish. And if you look closely on the weekly chart, so you look closely on the weekly chart and you notice the retracement that this, I'll say Nasdaq tends to do. You can see right this retracement over here. And if you calculate the retracement in points, it's retraced about 360. And the retracement down here, about 370. Retracement down here is definitely less than that. And let's look at the retracement down here. Retracement down here is about 340. So based on the historical price action of Nasdaq, we know that price tend to retrace about 380 to about 400 points. So if price does a 300 to 400 points retracement, that should be a normal, I would say, anticipation or tendency for this Nasdaq, because that's what price action has been telling us. So right now the retracement is only 260 points. So we do know that the maximum correction or retracement we had over the last few couple of years was about almost 400. So I wouldn't be too worried as long as the 400 number is not breached. So that should land us somewhere around the 3, I would say from here is about 4128 minus 400, it gives us about 3728. So 3728 is about here. So as long as price is still being supported by this 3728 level and it's still above the 50 period EMA, right? You can see the 50 period EMA in blue. Price has not closed below it. And the last time it closed below it was in October 2012 over here. So as long as price is still being supported by the EMA, there's no reason to be bearish just yet. And in fact, I will look to long on retracement on this in particular index. So yep, that's all I have for this Nasdaq. And traders could actually look for long opportunities down here, right? You can see classify this as the value zone, and the best, I would say the best entry you can get is close as towards the 50 EMA. So stops I will usually use the 280R, and there's be no difference for this particular trade. So that's all I have for you guys this week, and if there's any comments, if there's any questions, feel free to email me. And with that, I wish you guys good luck and good trading. I'll talk to you soon. Thank you.